Dive further with our
The
CoinDesk
Crypto Markets
guest.
Update is presented by Grayscale, the world's largest digital currency asset manager.
Joining us now to discuss the crypto markets is Fred Pai, CEO of Canadian crypto fund manager 3iQ Digital Assets. Good morning, Fred. Thanks for joining us. So, what's your Bitcoin outlook or the crypto markets outlook amid central banks around the world, the Federal Reserve, the European Central Bank, the Bank of England, tapering pandemic-era stimulus?
Well, good morning, Christine, and certainly hi to you, Lawrence. Good to see you both again. This has been a really quite an interesting week because sort of what you were following off what you were saying there, Lawrence, inflation here is inflation not here. But we have a whole new generation that's looking at inflation that was, kind of 6-7% going, 6-7%. Wait till it really starts to take off. And I think this next generation is going to realize that inflation will have an impact. But what was interesting to see is this kind of battle between the risk on and risk off Bitcoin holders, right? So a couple of things that we look at very closely is inflation good for Bitcoin or bad for Bitcoin? Well, we know that printing money is good for Bitcoin because that's a risk on asset. So as long as the Fed starts printing money, but when the Fed says, well, we're not going to print any more money, we're going to start tightening in 2022. We've announced three rate hikes. And I think the FOMC meetings this week just basically told us what the market had already priced in. But if they start raising rates, what we're seeing is the institutions coming to us saying, look, we are looking for that inflation hedge. So we are the risk-off buyers of Bitcoin, the store of wealth buyers of Bitcoin. So you have this battle between is it a risk asset or is it the risk-off asset going on? And I love watching this battle because it gives us a great range.
Do you think the leg lower is already priced in, or there's still room to go lower considering all this tapering happening?
Yeah, I definitely think that we're going to have range. We're definitely range bound, but the amount of buying that comes in, again, I don't know if you saw the stats this week, retail buying peaked up as soon as we got back down to 45, 46 again, and it, spiked up again and brought us back to 49. What we do know is the supply is getting tighter and tighter and tighter. There are a lot of, just based on our business and the number of quotations we're going out and doing and talking to people about, some of their first investments in Bitcoin. And these are institutional, purchasers of Bitcoin. But when Bitcoin was up at 60, everybody goes, "Oh, we're not ready yet." But when we get back under 50, the phones start ringing, people start calling and say, "Hey, we're ready to start looking at this. Is a good time to get in."
Fred, I have to jump in for a second because one thing you said that as rates go up, that you'll see this sort of risk, that you'll see sort of a risk on worry about inflation and what have you. It almost sounds a little bit Turkish, right? That's kind of what Erdogan's saying in Turkey. Hey, if you raise rates, you're going to create an inflation. Or do you think that that's really going to be a signal that, hey, the markets are probably underestimating or misunderestimating the role of inflation in prices? That inflation is actually worse than perhaps the average person is led to believe, and that's why rates have to go up, and so they're going to freak out and buy Bitcoin.
Well, Lawrence, in some of our research, and this is going to shock a lot of people, take out crypto as the risk assets. Let's talk about some of the other risk assets like the markets and things like that. Do you understand in the last 2 years, your price of gas has gone up way higher than the risk assets you're investing? The price of used cars have gone up way greater than the risk assets that you're investing in. Your groceries have been to the grocery, like easily your grocery bills are way higher than the best risk assets that you have. And your utilities even, and your cell phone bills and the stuff that I'm paying for, it's nuts right now. And so what we've seen is huge movement in inflation underlying, but it's only posting a 6 or 7% number yet. But I think it's a lot greater than that. So what we've seen is two things. Is I do believe that Bitcoin next bull rally will be completely created over the chase for the store of wealth. Okay, I think the decades of risk assets of endless printing of money is definitely starting to peak in, and we are going to hit an inflection point. What we will have also seen, which is very important, is the movement of the other crypto assets, the other digital assets, the other blockchains that are actually coming into a maturity right now. Like Bitcoin's domination is down significantly. But if you take a look at what, the Algorands, the Avalanche, the Cardanos, the Polkadots, the Solaris, the Stellars, the Tedals, the Polygons, like all of these blockchains that are working in either DeFi or NFTs or the metaverse, it's a whole new generation. And those early adopters of Bitcoin and Ether are now ready to move on to this next level. And we've seen a reduction of the domination of Bitcoin and Ether. And I think we're going to continue to see that. But the only one who will react positive to inflation will be Bitcoin.
So I want to ask you about this that notion, because obviously you have some ETFs involved in ETH, and you have Bitcoin, et cetera. So how have they been trading, and who are the customers for each one? I mean, who's buying these ETH ETFs and in Canada, and who's buying the Bitcoin ETF in Canada? Is it institutional? Is it individual investors? Like, what's the breakdown? Who's the demographic here buying this? And how has it been going?
That's a really good question, Lawrence, and we're pretty sure it's significantly retail. And a couple of things. In Canada, you can invest in the ETFs that are on the Toronto Stock Exchange and put them in your retirement accounts and your tax-free savings accounts. We also list other funds around the world, and in other countries around the world, people are saying, well, why don't you just buy Bitcoin? Why would you buy an ETF? Well, they really don't want to have to deal with their wallets. They don't want to have to deal with their keys, their private keys, and understand all of this. The ease and the confidence you can have in a prospectus-based ETF is extraordinary. But again, Canada, we've peaked at probably somewhere around $3.5–4 billion of these types of ETFs, which maybe, we've seen the demand fairly flat over the last few months. So the early adopters are in. Now, having said that, most of the Canadian chartered banks will not allow their investment advisors to buy even a Bitcoin ETF in their client portfolios. So it has not reached any kind of sizable adoption. And that would be the same in the US.
So what do you think is the reason why the SEC is so skittish about a Bitcoin ETF? I mean, as the only non-Canadian on this panel right now, what is it that the Canadian regulators know that the Americans don't, or vice versa? What is it the Americans know that the Canadians don't?
Well, first of all, the Canadian regulations, and it was 3IQ that worked with the regulators and, in fact, challenged them in a public hearing to talk about our processes for doing this. I understand that Gary Gensler says until the SEC control the entire pipeline of crypto or Bitcoin, his major concern is money laundering. In Canada, our regulations are that we have to be with a regulated financial institution for custody, which is ours is Gemini. We have to have a Canadian custodian. It has to be auditable, and only one trading desk. So it's our trading desk that buys all our Bitcoin from regulated trading desk platforms. We can cipher trace all of ours. So the OSC can come into our fund and check every single Bitcoin that we've bought. And that's a very big difference. You multiply that by 10 or 100 in the United States, and the policing would be, extraordinary. So I think, Canada is certainly leading the world now with our ETFs and our closed-end funds.
Right. He's concerned, Gary Gensler is concerned about market manipulation, yet he is okay with a futures Bitcoin ETF. I don't know how that market manipulation could somehow be completely eliminated if that's his concern in the Bitcoin market, but we'll see. I don't know if you have an answer to that.
I do, Christine, because market manipulation was one of the big challenges by the Ontario Securities Commission with us. We said, although you could find evidence of market manipulation potentially on exchanges in China and everything else, the regulated exchanges that we build our indexes off nobody's been able to prove any sort of market manipulation. So whether Bitcoin has, and we would always call it the Bart Simpson chart pattern, or the upside down Bart Simpson chart pattern, where Bitcoin would go like this and then go across and then bounce back up. We could not prove, and the OSC could not prove, that there was rampant speculation on the major exchange-traded Bitcoin products. And I think that people have to understand that some of these exchanges we're working with now, in Coinbase and everybody else, these are all regulated, solid institutional plays, and nobody's there to allow any kind of messiness or fooling around with. But again, if market participants come from all over the world, it could be tougher to police.
Fred, if you have a Marge Simpson chart pattern where the price moves dramatically up and then sideways for a little bit and then back down quickly, because of manipulation in other countries, such as China, such as some of these exchanges where we actually don't even know where the servers are, it creates a price distortion that affects ultimately Canadians owning ETFs and Americans who buy into it, for instance. So isn't that still a concern for regulators, that nonetheless they can't control that overseas aspect to it, and it does move the prices so much and so dramatically that it can't help but affect even the legitimate market prices found in regulated exchanges in North America?
Well, again, when you take a look at the ETFs that have been created, we all follow different index patterns, or we all have followed different indexes. And these indexes, a lot are time-weighted pricing. So our ETFs are all based off of, not one instantaneous spot price of any one exchange. And really the only, spot price that matters is the one at the end of the day. But having said that, it is understood that certain stocks, stop losses will get taken out, leverage will be squeezed, and everything else like that. That's normal. Whether you're talking gold, oil, any other kind of commodity and or security. So nobody was able to prove that it's that different on Bitcoin than anything else. Again, sticking to the 7 major exchanges that any of us would only be comfortable dealing in, and not secondary, third level exchanges in Asia or in East Bloc countries or anything along those lines. So we were very comfortable with our pricing. Our indexes are all created by MVIS, Vanex index company out of Europe. We worked very hard on building all the indexes. You're going to see a bunch more indexes come out, which will have products surrounding. And full disclosure, VanEck is a major shareholder of 3iQ, as is CoinShares. As you know, we're 3iQ CoinShares branded ETFs.
Right.
But yeah, we're all in this business to make it regulated, and the more regulated it is, the better it is for all of us.